Completing one that was fairly creative. We got a client into a $1.1 million house, and I think they have about 80 to 90 grand into it, just because of that kind of process where they did some work themselves and had done it over time. But no, purchase plus improvements. So again, just basically, you're finding the location. You might find your dream house. It might need some work. Maybe you do $40,000 now. Maybe you do a little bit over time. But basically, if you're buying a house with 5% down, you're not refinancing that for at least 5 years, because to refinance you got to be down to the 80% because you can't get mortgage insurance on refinances. So it's something to keep in mind when you're buying it. Get whatever you're going to want done then, because this is the lowest cost money you're going to get. Okay, so what you need to know: manage your credit. One thing, actually, and I'm glad that's bold there. Cell phone bills matter. They do report to your credit bureau, and if you have limited credit and you suck at paying your cell phone bill, that can actually hurt you from getting a mortgage. Another thing is that if you get pre-approved or if you have an offer on a house, don't go to Leon's, don't get the no interest, no payment credit card, and don't go buy a bunch of furniture until after you close. Because what will happen is lenders could pull your credit before closing, and it could kill your deal. Don't go lease a new car either, because that could kill your deal again. If the lender pulls your credit again, sees that you have a car loan, suddenly your debt service ratios are off. Because there's numbers you have based on your income and your other debt. There's certain numbers that we have to qualify you. So if you end up going out and borrowing more, then you could kill your deal, and then you could put yourself in an awkward situation.
So just because you can afford it, doesn't mean that they'll still give you the money. That's the biggest thing.
Yes, yeah. In employment history, so changing jobs just before you buy a house can be troublesome because you can't be under probation in most cases unless you're in a similar field. If you're leaving one employer to go to a similar type field, you've been doing it for a long time, we can get exceptions, but generally lenders want you to be out of probation, so you're going to have consistent employment.
Question,
Sure.
how long is a probationary period?
Depends on the employer. Some it's 3 months, some it's 6, and some I've seen up to a year.
Dependent.
Yeah.
Okay.
Is there any type of leniency or understanding to changing jobs because, or you're changing jobs because you moved to a new city? So
Yeah.
you're buying a new house because you're taking on this new job, and you're like, is there any accommodation for the creditor's understanding? Well, you're getting a new job, and that's why you're getting the house.
Yeah. So in terms of it depending, so like say, I don't know, you were an insurance broker and you were in Ontario. You're moving to Nova Scotia, you're going to be an insurance broker again. There's probably an exception to be made there because odds are if you don't last at this one, if you've been a broker for the last 10 years, you probably can find another job.
Right.
So it's a kind of a bit of a exception process, but it is doable, I guess.
At that point, it's a bit more case by case.
It really is case by case. And to be honest, that's the thing. Like a lot of this is general. Each one of you guys all have different types of incomes. You have different debt loads. You have whatever else. Everyone's situation really is unique. So it's really about customizing the solution and figuring it out for you guys. One thing too, file your taxes on time. So unless you're going to put 20% down, we do have some lenders that don't require us to show tax returns. So that can be helpful in some cases, but if you're planning on putting 5% or 0 down, definitely have your taxes done on time and make sure you don't have outstanding taxes. They're going to want to confirm that the max you have outstanding to CRA is $2 grand. That's because CRA has the power and they can basically freeze your life and, well, freeze your bank accounts and take stuff. And make it so you can't pay your mortgage and then you end up with one of those lovely bank repos.
Does anybody work for CRA here? Okay, good. CRA's the devil.
Exactly.
I didn't want anybody to headhunt you, that's all.
That's funny. we have a client that works for CRA. She's not too bad.
We have a couple, yeah.
Yeah.
Oh, she's a sweetheart.
Okay, yeah, the fun part is like once you're pre-approved, you get to go shopping. And really that is the beauty of it. And sometimes too, and that's one thing actually, we'll go back to the pre-approval comment for a second, that sometimes it really can vary. Like when it's, say, it might be $300,000, there might be a $300,000 house with a property tax bill of $3 grand, or there might be the same house in a different neighborhood, just happens to be assessed differently, it might be $3,500 or $4 grand. So the property tax bill can actually make you not afford a house based on your pre-approved limit. So, and if you're looking at duplexes and rentals, there's lots of other considerations in there as well. But I guess on that too, if you want to buy a multi-unit with 2 units or less, you can put 5% down. Up to 4 units, you can put 10% down. So it can be a good way if you want to get into the market and build a rental portfolio to buy a duplex or a fourplex as your first one. So that way you can use the mortgage insurance and still have cash to potentially do something else in a couple of years.
Someone makes 80 grand a year, just a rough idea, how much pre-approval they can get?
It would depend on a lot of factors, I guess, like in terms of did you have any other debt and everything else, and
Let's say
and those things debt free.
Yeah.
I wouldn't attempt to do that in my head right now, but I can definitely pop it through a calculator and give you a number quite quickly there. But
Well, it's just, I heard somewhere it's 4 times what you make. Is that correct, or?
I don't know if I really equate that back, to be honest, but yeah, I can run a calculator in a couple seconds and tell you, but I wouldn't try to.
That's only the price of an engagement ring is 4 times what you make.
Yes, exactly. Yeah, exactly. 3 months' salary, right? Get expensive. So, yeah. Any more questions?
All right, guys, give it up for Blake. Next up, Carlos Purcell from RBC Insurance. This is the guy that Max knows, tries to steal my pen. Not a good guy at all. You guys are lucky that this is 2 years in, because
There we go.
Carlos is a terrible person. And
Can
Carlos,
we move on, please? Let's go.
Carlos used to explain insurance by telling us a story about how a little baby would die. So he's got over that story now, 2 years later. And guys, with that intro, Carlos Purcell.
That was the worst intro. As per usual, this is just crap about me, no big deal. So I guess the first question I'll ask is how many people are renting that are in here right now? Currently renting something? A lot of you guys. How many of you that are renting have tenants insurance? Most of you? Okay. If you don't have tenants insurance, I'm going to tell you right now, get it. Especially if you're looking at buying a house. Because like your auto insurance, your tenants insurance is going to give you an insurance history for home buying. Okay, so 2 factors with that. Number 1, when you go to buy your home insurance is going to be cheaper as a result. Number 2, tenants insurance is relatively cheap. I can give you tenants insurance for like $12 a month. Okay, so for $12 a month, what tenants insurance will do is it's going to cover you for your personal belongings and your personal liability. Personal liability is where the baby story came in, which I've eliminated. You're welcome. But personal liability is very, very important because we're in a litigious society. And you can be sued at any time, and that includes by a landlord or somebody you're renting from. So if you do something negligent, doesn't mean you did anything on purpose, it means you did something by mistake. You could be sued, and it could basically ruin you. So if you're renting, I strongly encourage tenants insurance. That's the last I'll say about it. All right, so I mean basically the reason you need me, and the reason you need everybody in here is because at the end of the day, unless you're fortunate to have a lot of money, where your mom's just going to give you $500 grand to buy a house, you need to go to a bank and you need to borrow the money. And to borrow the money, there's different rules. One of those rules is if you have less than 5% or less than 20%, you need to take a loan through the bank. The bank wants you to ensure that they're safe. The other rule is that the bank also wants to know that if the house burns down or if anything happens to the house, that they're going to get their mortgage back. They're going to get their money back, right? So that's why you need me. So at the end of the day, you need 2 things from me. You need to know that the house that you're buying is insurable, and I'm going to tell you that not all houses are insurable that you can buy. And number 2, before you get the house, the bank needs to know that the house is actually insured. So you're going to need something from me saying that it is insurable, and before you meet with your lawyer, before you actually purchase the house, I need to be able to give you a letter that says this house is insured for the date, the exact day, minute that you take over that house. Okay? So when you're buying a house, the thing that you want to understand is you're really purchasing a house insurance to guard you against things that can happen to your house. So in the insurance industry, we call those perils. So a peril, for example, would be fire, wind, water, explosion, theft and burglary, all examples of the perils. Does anyone have a guess, or can anyone tell me what they think the biggest peril, in other words, the thing that happens the most that insurance companies are paying out in Atlantic Canada? What peril do you think would cause the biggest issue? Perfect. Give that man a Kinder Egg. And I know he's already got one. He deserves 2. That was a great answer. That was perfect.
No.
Damn it. All right. So yes, that's a great answer. So 70% of all claims in Atlantic Canada are surrounding water. Okay? So no longer are we buying quote-unquote fire insurance. And when you speak to your lawyer or your mortgage broker, they might even use the term fire insurance. I need fire insurance because the bank still asks for that as fire insurance. But fire insurance is no more. You're buying everything. So you can buy an insurance policy customized to cover literally anything that can happen, all the way up to a zombie apocalypse. If you want that coverage, I can give you that coverage, okay, if you're worried. I mean, don't be worried. I think we're good. So,
Will insurance go higher if your house is in flood zone area like happened in Ottawa recently?
absolutely, yeah. So if I'm living in the States and I live on the Mississippi River and I want water coverage, yeah, absolutely. I'm probably going to pay more for that water coverage because I'm on a floodplain, right?
You get it at all.
There you go, and that's the next thing, and that's if you can even purchase. So insurance companies have started to hedge their bets. So what they've done is they've done a couple of things. Number one, they've said, you know what? We know that water is 70% of all claims. So if somebody steals from you, or if your house catches on fire, or if a windstorm blows your roof off, well, you've got a deductible. Can anyone tell me what a deductible? Does everyone know what a deductible is before I go to deductible? So a deductible, just so you know, for those who don't know, is your portion of the risk. It's like you're self-insuring this portion. So it's what you pay before the insurance company pays. So they'll have a $1,000 deductible for anything that happens. But then if it's a water claim, they could have a $2,500 or a $5,000 or even a $10,000 I've seen deductible for any water claim. So one thing you want to ask your insurance company is, number one, what water coverages don't I have? Don't ask them what you have, ask them what you don't have. If I buy this insurance policy, what am I not covered for in case of water? Because water is 70% of all the claims, so you want to know what you're not covered for. Number two, what's my deductible? So if they say, hey, you have a $1,000 deductible, but I have a $10,000 water deductible, well, there's a pretty good 7 out of 10 chance that if I have a claim that's going to be water, that policy might not be for you. Because I don't know about you guys, but I don't really think I can afford 10 grand just out of the blue when something happens to my house, right? Because you're really self-insuring any water damage at that point, quite frankly, okay? And to your point too, there are chances that insurance companies won't even insure you for water if you did in fact live on a floodplain, as an example. So they'll say, hey, we'll give you insurance, but we're not going to cover sewer backup, we're not going to cover overland water. So that's a terminology that we use for flood on the insurance side, okay?
Will that bring the house prices down, I wonder?
No, probably not. But I mean, it's something you'd negotiate, right? I mean, obviously, when you go to your real estate guy, and they're a good real estate guy or girl, right? And you all of a sudden realize, hey, I can't get insurance for this thing, and not only that, I'm paying like 200% more for insurance on this property than I would for any other property in any other area. They may be able to use that in a negotiation for you, right? Absolutely. Okay. So, you know, at the end of the day, there's only two types of coverages you can cover in Canada, and that is what's called named perils and all perils. So when you're talking to a broker or somebody you're buying insurance from, the one question you're going to ask them is, hey, does this have all perils? If the broker says, what's all perils? Run, stop talking to that broker right away. If they say it's named perils just simply means that, you know, you're going to have the basics. You're going to have the fires, the winds, the waters, the thefts, the burglaries. It's going to be a very basic policy, whereas all perils is going to cover you for literally anything. Even if you left your tub on and went out and just forgot and there's water in your house, you're covered. If your kid, or if you had a kid, decided to drop a TV, you know, as they're walking down the stairs and the TV blew up and caused a bunch of damage to your living room, something like that would be covered. Where named perils is only going to cover your kind of act of God things, right? Your fires, your winds, your waters, that sort of thing, okay? Any questions to now? I know I'm screaming right through, yeah.
This is maybe a little too early in it,
No,
but
that's okay.
with climate change now becoming more and more apparent, is the insurance industry pivoting, or are they at least starting to consider the fact that there's going to be more and more issues happening?
Yeah, I mean,
Canada, hurricanes are coming.
absolutely. So a perfect example is, I don't know if any of you are in the news lately, but you've probably maybe heard of the sinkhole in New Glasgow. So a house, it was like a $600,000 or $700,000 house, sunk into the ground. Sinkhole is something that's not covered by any insurance company in Atlantic Canada. So if you happen to have that issue, we call it earth movement. So it's a movement of the earth, which is one of the very few exclusions, even to an all perils coverage, isn't covered. So absolutely. So things like that we've never seen in Atlantic Canada, of course, are definitely going to have an impact, because insurance is all about indemnity. It's all about putting back in the same spot you were in before the loss, right? And the other part of that is we want to insure you against losses. So the losses that we're going to insure you in Atlantic Canada are probably going to be different than...
Please join us in the Paul Regan Hall on the first floor for some classic country old-time fiddle tunes and toe-tapping favorites with the Farm Team Band as part of the National Fiddling Band. Special guests include Christy Hodder and the Suzuki School of Music and Dance. The fun begins at 11 o'clock and all are welcome to attend.
Wow. Well, there you go, guys. Now you got a show after this.
I know.
So
Not faster.
yeah, so at the end of the day, I mean, so like I was saying, in Atlantic Canada, like for example, you can buy earthquake insurance. I can sell you earthquake insurance, but am I gonna recommend that to you when less than 1% chance of anything happening that's gonna really affect your house? Probably not. But if you lived in California, in San Francisco, let's say, I'm definitely gonna offer you that earthquake, and I'm gonna recommend it to you. So those climate changes, all the coverages are there. It just depends on where you live, right? I guess would be the easiest answer, right? And a lot of these we've kind of covered already. I mean, the one thing is, and I know I'm harping on it, but if you don't have tenants insurance, the liability part is very big because it's very, very important. I mean, tenants insurance is going to give you that personal liability anywhere in the world. I can't stress how important that is because, as David will probably attest, if you're sued and you lose, it doesn't really matter if you declare bankruptcy or any of those types of things. You're paying that back, and there's just no way around it. Okay. So there's 4 major aspects to any house, and I'm not going to go too far in depth with any of these things. I'm just going to tell you that when you're looking to purchase a house, these are the 4 factors you really want to consider because they're the only things that the insurance company cares about. And I talked about it already. The house has to be insurable in order for you to be able to buy the house. If it's not insurable, you can't buy the house. It's as simple as that. Well, you can if you want to use your own cash, but if you want a loan from the bank, it has to be insurable. So when you're thinking about buying a house, I really want you guys to get in the mindset of thinking about the roofing, the heating, the electrical, and the plumbing. So I want you to you don't have to be contractors or even general contractors or anything like that, but these are the questions you want to really ask, someone like Lawrence who's doing an inspection. Hey, how old's the roof? How is it heated? The electrical, is it up to standard? Is it old? Is it, and plumbing, same thing. I mean, when you're buying a house, let's say in the south end of Halifax for $1.5 million, that's probably a house that was built in the 30s, maybe even the 20s. So a lot of times there could be stuff in that house that just simply don't meet requirements of today's world. It could have knob and tube wiring. It could have cast iron drinking water, right? So you don't want it, for number one, you don't want it for the insurance company, and number 2, you don't want it for you because you don't want to have this huge bill when you first move in to have to replace a whole plumbing system or a whole electrical system, okay? And these are just sort of things, again, we have Lawrence who's going to do an inspection report, so he's going to kind of go over this for you, so I'm not going to go too much through that. Does anybody have any questions at all regarding home insurance? I know we're trying to give you just the bases, and we can't cover everything at one time, so we just sort of breeze through things, so I apologize, but we're all available after this if you have any questions, okay?
All right, guys, give it up for Carlos. Next up, the law.
The law. As yours is done, so.
Lucky for you guys, we have now David Melvin doing his presentation under an hour now.
Yeah, under an hour.
Yeah, so he doesn't take...
Guys give me a hard time over this crap. Jeez. All right, sorry. This gallery of rogues I hang out with. So no, I'm a lawyer, practicing for coming up on 14 years now. In terms of my practice, about half my practice is real estate. The other half is a mix of corporate, commercial, small business, wills, estates, kind of all the stuff like family doctor almost. Whatever your problem is, you come in and I try and figure out how to fix it. And if I can't figure it out, we'll find you somebody who can. But no, in terms of the presentation, I've kind of set it up around kind of 3 basic things, based on kind of questions I've always been asked in doing this. First is, why is the agreement so long? If you're going to buy a house, you're going to have like a multiple page contract with small print, all these terms and clauses and stuff. It just seems kind of overwhelming. It's like, why can't we just have a handshake here? Like this, just let's be civil. Next question is, what do you do, David? Next is going to be kind of questions I ask you as part of the process. There's going to be a fair number of them. They're not overwhelming, but I want to kind of give you like a preview on what those are. And then we'll just have a chance to chat about some questions and a little bit of limitation clauses here. First up, why is the agreement so long? And there's a couple reasons for that. First is something called the Statute of Frauds. In Nova Scotia and every province in Canada, you cannot have a contract for land unless it is in writing. So you can't have a verbal contract for land. You can't shake hands and agree to buy a neighbor's house, and then if the neighbor decides the day of you agree to close to say, yeah, I'm not selling it to you anymore, nothing you can do. Can't sue them, can't force them to sell it to you. Not in writing. That comes out of the, the old, a couple hundred years ago when, only the rich people had the ability to read and write. They didn't want poor people to be able to have any power. So first thing we did was pass a law that says you got to be able to read and write to own land. Get rid of all these peasants owning land. We don't want that.